investment banking, arguably the highest paying industry to join after you graduate, but how much are they paying their employees in 2022? What is going on YouTube? Welcome back to the channel. Today we're talking investment banking salaries for bulge bracket US specific investment banks and salaries for those in the investment banking division specifically. Now, a lot has happened in the last 2 years with the global pandemic, but a lot of the investment banks, especially in 2021 and early 2022, have increased their base salaries and some have increased their bonuses for their employees across analysts, associate, VP, director, MD positions. So that's what we're going to talk about today. A quick note for anyone that's new around here, we're going to be focusing on total compensation. What total compensation is for now, we're talking about base salaries and bonuses. So together they combine to create total compensation for the year for any given employee. There are things like, signing on bonuses, stub bonuses and all those things, but today we're only focusing on base salaries and bonuses. The figures I'm going to mention, they've been collated from various data sources. You can check all the relevant links in the video description below, and also they are pre-tax. So the base figure, the bonus figure, all of that is going to be pre-tax, so keep that in mind. Also, it's important to note that there's going to be a wide range of figures. Some banks pay bigger base salaries and smaller bonuses, whilst other banks do the opposite. They pay smaller base salaries and bigger bonuses. And last but not least, all the figures are going to be quoted in US dollars because that currency tends to work globally for everyone. It's easier as opposed to stating the figures in pounds sterling. Alright, so the base salary for analysts is between $100,000 and $125,000. Now, the reason why there's a range is because this is for analysts 1, analyst 2, analyst 3. So typically you're going to be an analyst for 2 to 3 years. And so within those 2 to 3 years, you can expect base salaries between $100,000 and $125,000. In terms of the bonus, this obviously is likely to increase as your experience or duration at the firm increases. Bonuses range from $50,000 to $125,000. And so total compensation for analysts is between $150,000 and $250,000. Now, once you do your 2 or 3 years and then you get promoted, you become an associate. Typically, you're going to be an associate for 3 to 4 years, and the base salary ranges from $175,000 to $225,000 for associates. Associates can be there for 3 to 4 years before they get promoted to vice president. In terms of bonuses, associate bonuses range from $125,000 to $325,000, and this obviously increases within that range the longer you are an associate. You're going to be an associate for between 3 and 4 years before you get promoted to vice president. Therefore, in terms of total compensation for associates, it's in the region of $300,000 to $550,000. Now, if you're interested in breaking into investment banking or any other division within an investment bank, you should check out today's video sponsor, Financial Edge Training. Financial Edge offer tons of online courses across investment banking, asset management, sales and trading, engineering, operations, equity research, and more. FE deliver new hire training to the top 4 investment banks as rated by the Financial Times. And last week, they launched a new product called Felix. Felix is the on-demand toolkit for individuals pursuing a successful career in finance, combining expert teaching with up-to-the-minute data and models. This subscription product is perfectly placed to help students make the leap from university to employment, as well as assisting young finance professionals on the job. A subscription to Felix provides you access to an on-demand video library with more than 2,170 instructor-led videos, Ask the Expert feature, streamlined company analytics, market and industry data, sector and transaction models, and more. Best of all, you can get 25% off all Financial Edge online courses, as well as 25% off Felix. For more details, check out the link in the video description below. And with that, let's get back to the video. So once you've done 3 or 4 years as an associate, you get promoted to VP, Vice President. Base salaries there range from $250,000 to $300,000. Bonuses there range from $250,000 to $600,000. And that brings total compensation for Vice Presidents ranging from $500,000 to $900,000. So at this point, it's important to note, the more senior you become, and this is typically at the VP and the next levels I'm going to talk about, the more of your salary gets tied up in the company stock. So you can only unlock it and turn it into cash the longer you stay at the firm. So they might say you can unlock 100k if you do another 2 or 3 years at the firm. And that way they kind of lock you in, and so you don't just take that money and go and join another competitor. So you kind of get locked in. Okay, 3 or 4 years as a VP, and then you get promoted to a senior VP, senior vice president, or a director. And you're there for around 2 or 3 years, typically, before you become managing director. In terms of director or senior VP, base salaries can range from $300,000 to $350,000, and bonuses can be anywhere from $500,000 to $850,000. This brings total compensation to around $800,000 to $1.2 million for directors or senior VPs. A lot of people become VPs and they stay there for most of their career. They're happy with the money. They are happy with the balance that their work gives, but only the cream of the crop go on to become managing directors. So those who go on to be directors and then managing directors after 2 or 3 years, it's a very select few. Not everyone can do it. But for those who do go on to be managing directors, base salaries start from anywhere between $400,000 and $600,000. And then bonuses, important to mention here, bonuses really do depend on performance. So if the managing director or their team that they're responsible for has been performing poorly that year, bonuses could be zero for them. If they're doing really well that year, bonuses could easily be in the multi-million-dollar region. So keep that in mind. But once again, there is a lockup. More of their salary gets tied up in equity, which they can unlock the longer they stay at the organization. So in terms of total compensation for managing directors, anywhere between $1 and $3 million. There's obviously going to be anomalies on either side of the spectrum, top performers, poor performers, so on and so forth. Some firms do, like Goldman Sachs, they have a partner rank. So above managing director, you can become a partner. And you know, that's a very select few, but not all organizations have that. All right, so you're probably wondering, there's been a global pandemic. How on earth are investment banks, and why on earth are investment banks paying their employees more? Industries such as tech and other competitive industries who are constantly hiring talent and taking talent away from banking are beginning to pay their employees and individuals in those industries a lot more. So for example, a lot of tech companies are paying higher base salaries, and so a lot of talent who graduate from university are not just considering banking, they're considering big tech companies as alternatives and more interesting career paths that pay lots and also have a good work-life balance. After all, who wants to work 100 hours a week? Even if they make so much money, it could be a bit draining. Also, a lot more people are prioritizing work-life balance as opposed to high base salaries. So another interesting fact is that during the pandemic, or in 2021, global M&A fees reached a record high. So there were lots of deals being made during the pandemic, and banks were actually making lots of money in terms of fees. As a result, this translates into potential to pay their staff more money, given the higher number of profits or revenues that were being generated on the back of increased activity across the globe. Everyone was working from home, and so when you are in investment banking, you're typically working long hours, right? But if you're working from home, it means you have to be, or unwritten rule, you're going to be available 24/7. And so when employees are working or available 24/7, especially during a pandemic, it makes sense to boost morale by boosting base salaries or paying higher bonuses. And so if the banks were making more money, it naturally translates to higher base salaries, especially due to the dire working conditions, working alone, working at home, 24/7, so on and so forth. And then last but not least, there was the leaked Goldman Sachs working conditions survey that a number of, I think it was 13 Goldman Sachs investment banking analysts put together and got leaked all over the internet. And so that didn't really paint a good picture for the industry. It wasn't really a surprise because, anyone in the industry knows that the working conditions or the working hours are very long, but it just brought that to attention across the board. And so firms felt like they needed to do something about it. So for these and a number of other reasons, that's why a lot of investment banks across the board have increased salaries heavily over the last year and a half. Do you want to get into investment banking? Are you interested in the industry or not? Are the salaries tempting? Yes or no? Let me know your thoughts and opinions in the comment section down below. And if you enjoyed this video, check out some of these, and I will see you in the next video. Peace.